Hi everyone, Alex LaRosa here, and today I want to talk about tax loss harvesting. What I want to cover is one, a brief overview of what it is, two, when you would want to engage in it, some years that it might make sense, and then three, I want to give you a brief example of a tax loss harvest strategy. So, real quick, what is tax loss harvesting? What it is the action of selling an underperforming investment and realizing losses, right? So remember, the difference between realized and unrealized losses is when you sell, you then realize those losses or gains. When you're holding the position in any increase or decrease in the value, those are considered unrealized losses and gains. So when you realize those losses, right, you can then use them to offset capital gains in the future year or in the current year. You can use it to offset up to $3,000 of ordinary income, and you can even carry forward any unused losses into future years. And then finally, what you can do to complete the strategy is reinvest the proceeds from the sale into a different security that both meets your investment criteria and your overall asset allocation strategy. So when might this make sense to do? Well, in the past few years, there hasn't been many opportunities for people to have tax loss harvesting done because there's been nothing but gains. There hasn't been many losses, right? This year, things are a little different. The market's been down pretty much all year. Most people are going to have some kind of unrealized losses in their portfolio. So what you can do at the end of the year, or when you're getting close to the end of the year, find some positions that are underperforming, that have unrealized losses, sell them, right? Knowing that if you have capital gains this year, you can offset them. If you don't have capital gains, don't worry about it because you can use up to $3,000 to offset ordinary income for 2022 when you file your taxes next year. And you can carry forward any excess into future years. So let's just give you an example right here, right? Let's say that I bought Google for $10,000, right? So I bought $10,000 worth of Google. It's now currently worth $5,000. It got cut in half. Okay. So I can sell that position and realize $5,000 worth of losses, right? Let's assume I have no capital gains this year. So all I have is that realized loss of $5,000. I can now use $3,000 of that $5,000 to reduce my ordinary income for 2022. And I can carry forward the remaining $2,000 of losses into 2023 and beyond for a time when I might have capital gains and offset that. And I take that $5,000 of proceeds because I sold Google for $5,000 and I can reinvest that into, let's say, Microsoft, right? Let's say Microsoft, I like their future earnings potential better. I think they have better outlook. I can now invest that $5,000 into Microsoft, knowing Microsoft is down on the year, right, with the hope of that growing in the future, right? And then if I sell that in the future for capital gains, I'll have that $2,000 worth of losses to offset those gains. So tax loss harvesting is one of my favorite strategies to use in these times of years, and that's kind of what I tell my clients is, yes, the market's down, things aren't great, but it gives us the opportunity to set ourselves up better in the future with our taxes, right? Give ourselves some of the losses to have, knowing there will be gains, offset a little income this year, and also just rebalance your portfolio doing so. Be sure, if you're not sure how to do this on your own, be sure always to check with your tax preparer and your advisor. And if you ever have any questions about how you might want to do it, if you want someone to review your portfolio and find some good opportunities of tax loss harvesting and give you some ideas, feel free to find my contact information and reach out. That's what I'm here for. Thank you and have a great day.